The electric car manufacturing industry is one of the industries attracting a lot of big investors. Big car companies like Ford, Toyota, etc. have also switched to producing electric cars. However, the electric vehicle industry is also facing many problems. According to the CEO of Ford, the reduction in the price of electric vehicles is a worrying trend. Ford CEO reveals EV Reality America cannot continue to import batteries, earth minerals. So how did Ford change the way it produces electric vehicles to fit the current market? Ford CEO calls electric vehicle market price cuts a worrying trend. Ford CEO Jim Farley said on Wednesday that price cuts in the electric vehicle market were a worrying trend after the U.S. automaker dropped prices for its Mustang Mach-E in response to a series of reductions by rival Tesla. Ford announced a price cut of up to 8% of its Mustang Mach-E electric vehicle, the second cut the automaker announced this year. Farley compared the price war in the EV market to Henry Ford's series of price cuts for the Model T starting in 1913. But the Ford chief said the company founder's strategy ultimately put Ford at risk. Farley said at a Wall Street Journal forum, "You do not want to commoditize the product." Farley said the resale value for people who bought at higher prices is awful. They never forget. Ford will follow Tesla price cuts for models such as the Mustang Mach-E that competes head-on with Tesla's Model Y. He said there's a limit to how far we'll go. Musk wrote on Twitter, "Always tough with margins for new vehicle lines, especially when there are major technology shifts. I think Ford's overall strategy with EVs is smart. The electric F-150 has high demand." On other points, Farley said Ford does not plan to drop Apple CarPlay software that allows customers to mirror their smartphone screens in a vehicle's dashboard. Farley said in terms of entertainment streamed into a car, "We kind of lost that battle 10 years ago." Moreover, 70% of Ford customers in the US are Apple customers. Ford chose to build a new electric vehicle manufacturing hub near Memphis, Tennessee, in part because the region has cleaner electricity from hydro and nuclear facilities, Farley said. Farley said Ford will train workers for that facility and will invest in retraining current workers. But not all Ford employees will make the transition to electric vehicles. In addition, the electric vehicle manufacturing industry also faces specific difficulties. Ford CEO reveals EV Reality America cannot continue to import batteries, earth minerals. While American consumers and politicians seem to remain split on whether to go pedal to the metal on electric vehicle production, Ford CEO has shared a critical message to those who want them to rule the roads sooner than later. Ford Motor Company President and CEO Jim Farley told Fox and Friends co-host Brian Kilmeade, "No one makes more full-size trucks than we do in America. We have to onshore this stuff. We have to have mines and processing to build a digital economy here in the US. We cannot continue to import batteries and rare earth from overseas. We have to move it to America. We're willing to invest, but we have to have people in partnership with the government that's going to improve mines, improve processing. These sites are really important. We can build all the plants, but what's the good if we're importing batteries?" The CEO appeared on Fox News from Ford's newest EV plant just outside Memphis, Tennessee, to discuss the company's latest investment in the American economy as well as ongoing improvements within the EV market. So, the automaker announced it's expecting a $3 billion loss due to Model E investments geared to rapidly boost production of electric vehicles to an annual rate of 600,000 globally by the end of 2023 and 2 million in 2026. Model E reportedly lost $2.1 billion in 2022, and its cumulative 2021 through 2023 loss is projected at $6 billion. Earth minerals like nickel, lithium, and cobalt are essential for building EVs and their batteries, but recently, mineral shortages and closures of domestic mines could threaten the U.S. auto industry's ability to produce enough EVs by the Biden administration's 2035 goal. Farley echoed Lawler's sentiments that Ford's electric vehicle division is still in its start-up phase, where companies invest to build plants like this or develop the new vehicles before you scale. According to its CEO, Ford has learned a lot about the EV market and engineering with their first generation of electric cars. Farley explained the key is scaling and getting the manufacturing facility more efficient. But we make all of our full-size trucks in America, and we're going to bet on this new full-size electric Ford, and it's going to be built here in Tennessee, and we're going to continue to bet on America. So we're in investment mode. But that's what you have to do if you want to build a new business. Once completed and open for business, Ford's Tennessee EV plant expects to create 6,000 new jobs and generate $5.6 billion, the CEO noted. The all-new, all-electric truck will be equipped with updatable software similar to smartphones, a technological advancement not previously featured in any of their EVs. The CEO continued, "We think we're going to be able to deliver technology so on a sunny day on the highway, you're going to be able to go to sleep in your Ford or do something else. So this would be the first Ford that will have partial autonomy that's going to give Americans time back. And who doesn't want more time?" After that, Ford is about to break out big EV losses for the first time. Detroit Ford Motor is about to tell investors what they've long wondered: how much is the transition to electric vehicles costing? The automaker on Thursday plans to begin reporting its financial results by business unit instead of by region, assuring in the new reporting structure with a teach-in for analysts and media on the theme of Ford Refounded and releasing revised versions of its financial results that will reveal how the new business units would have performed in 2021 and 2022. Those new business units include Ford Blue, Ford's traditional internal combustion engine business, its Model E electric vehicle unit, the Ford Pro Commercial and Government Fleet business, Ford Next, which includes non-automotive mobility solutions and other future tech, and its existing Ford Credit Financial Services subsidiary. The changes amount to the most detailed look yet by any legacy automaker into the finances behind the EV business. The car maker is expected to release profits and losses, revenue, margins, and earnings before interest and taxes, or EBIT, for each of the units, giving investors and analysts a baseline for comparisons as the company's transformation unfolds. As part of a sweeping rethink of its business under CEO Jim Farley, Ford decided last year to separate its primary profit engines, internal combustion vehicles, and its commercial fleet business from the company's emerging all-electric vehicles, which are not expected to be profitable for at least a few years. Farley and other executives have emphasized that the reporting changes aren't just about disclosure. The new format reflects the way Ford's executive team thinks about and runs the business. Farley said the changes are significant. It's not the first time Ford Motor Company has had to reimagine its future or form its own path that's different from other companies. Wall Street is taking a wait-and-see approach to the changes. Analysts on average maintain a hold rating on the stock with a $13.50 price target, according to ratings compiled by FactSet. The shares traded about $11.70 per share. Shares of Ford jumped by 8.4% the day executives announced the new businesses, but the stock is down 35% since then, dragged lower by changing market conditions, supply chain issues, and underwhelming quarterly earnings. Farley argued last year that Ford's standalone EV business will produce as much excitement as any pure EV competitor, but with scale and resources that no startup could ever match. Still, he described the legacy business as a profit and cash engine for the 120-year-old automaker. As with other automakers and EV startups, investors should expect deep losses when it comes to Ford's electric vehicle business, according to Wall Street analysts. Model E is expected to include the company's EV platforms, electronics, batteries, motors, and embedded software and digital experience. Morgan Stanley's Adam Jonas expects Ford Model E to have negative gross margins of between 10% and 20%, with adjusted EBIT margins of between negative 20% and negative 30%. Both would imply significant losses. Ford has said it expects 8% margins on its EVs along with 2 million units in annual production of the vehicles by 2026, helping to boost its overall adjusted profit margins to 10%. The company's adjusted profit margin last year was 6.6%. Deutsche Bank analyst Emmanuel Rossner believes Ford could be incurring gross losses of about $9,000 per EV sold. The analyst expects Ford to reveal Thursday model E operating losses of $6 billion for 2022. That's after accounting for significant research and development investments, roughly 65% of the company's total R&D into the EV unit. Rossner said Monday in an investor note, the EV business could report much deeper losses than investors expect, which could make Ford's target for 8% EV EBIT margin by 2026 particularly difficult to achieve. Aside from EV leader Tesla, no major automakers are expected to generate meaningful profits from electric vehicles for at least several years, as the industry works to increase EV output and manufacturing scale. That's particularly true of EVs like Ford's, as mass-market vehicles typically generate lower profits than luxury models. Ford's plan is to cut at least $3 billion in structural costs, largely out of the traditional business, by mid-decade to boost margins. Kumar Galhotra, head of Ford Blue, said the company expects to do this by reducing complexity, quality, and structural costs over the next 2 to 3 years. Let's wait and see how Ford will revive the electric vehicle industry this year and the years to come.